And we are back on Buying America. And today we're going to discuss if the US is in reality a tax haven or not, or do we have to go to one of those small countries? Joe, what do you think? Last Saturday we were discussing this with an investor in Mexico, and I think it's very important to discuss it so other people can know our opinion about it.
Yeah, it's interesting. So we had a conversation, as you said. We were in Guadalajara presenting to a group of Mexican investors, giving them a tremendous amount of education. And as you said, one of the questions was, do I need to go offshore into one of these supposed like tax havens? Some of these little islands that supposedly will help people defer any sort of tax. And the reality is this, that the idea of that conceptually, sure, it makes sense. But what most people don't realize, though, is that the US itself was designed as a tax haven. The IRS code, it's pretty extensive and designed so that strategically any educated investor can take advantage of being able to either minimize their tax obligation to nothing or completely defer it. So no, in my opinion, people set up these international business corporations and these trusts, and they go offshore, and they spend literally thousands to structure these convoluted setups, and there's no need. It can be done right here in the good old USA.
I remember back in the days, I was researching a lot about, for example, Andorra, Malta in Europe. And then I learned a little bit about, of course, the Caribbean islands and stuff. But in reality, as you said, it gets very expensive to set up. And then once you set up, it gets very expensive to manage that transfer of funds here and there. And then you mentioned something. Of course, the IRS is not dumb. I mean, they're going to be looking after those kind of things. And we're not Apple, we're not Google, we're not the big guys that have all kind of money to
Exactly.
defend themselves. Man, I think if we, instead of investing a lot of money and time into trying not to pay taxes that way, if we can focus on creating more wealth, I think, I mean, the tax problem, if we keep the money here in the US and reinvesting here, it's a huge opportunity that I think it will pay off more than going to one of those little islands.
Yeah, no question. And to your point, if you're making in the billions and you're making hundreds of millions of dollars, and you have proprietary information and licensing and all that stuff, that's a whole other conversation. But for the average person, and even an individual that has a very successful multinational company, most often, like 99% of the time, there's no need to get into those types of structures. Again, the tax benefits and advantages. I mean, look, a foreign national can come into the US with open arms and start investing and be able to take advantage of the same tax codes that are available to a resident or a citizen. So it's with open arms that this country provides the opportunity to minimize your tax obligation. It amazes me. And especially in the US, when you have groups of people that are like, tax the wealthy, it's not fair, we need equality. You know what I say to those people? Hey, the system wasn't just designed for them. Exactly. Ironically enough, what you need to do is understand the rules of the game so that you could play the same game. In Trump's big, beautiful bill, right? You and I were having this conversation, and there's an element in that provides 100% depreciation of an asset in the first year. Do you have to be someone who has tens of millions of dollars to take advantage of something like that? No, it can even be someone who's just starting off. So the thing is, number one, where there's a will, there's a way, right? And then number two, educate yourself. And this is why we're providing this platform. It is available and accessible to anyone who wants to succeed.
And as we were discussing this immediate expense or accelerated depreciation or bonus depreciation, because there are several options in the law, in the tax law in the US, the reality is that you have more than $1 million. I think it's like $1.3 million, something like that, in assets. If that when you buy them, you can depreciate them immediately, which opens a great opportunity. And that's why a lot of people, a lot of smart entrepreneurs, business owners, investors use it to the advantage, because actually it's like the IRS is financing you the purchase of assets. I was explaining yesterday also to a group that, for example, there's a lot of accountants telling you right before the end of the year, hey, you should go and buy a car or a pickup or a big SUV, because if not, you're going to pay a lot of taxes, right? So, and the reason why they tell you that is because even if it's November, December, and you buy this big pickup or whatever that it's around, I don't know, 100 grand, you're going to deduct 100 grand this year, even if you just have it like for a month. And you're going to depreciate it. Now, the problem with that pickup is that it can become a real liability instead of an asset, right? So if that pickup, you use it for business and you're going to bring more business in, hey, there's an asset. If you're going to just use it for leisure, then it becomes a liability, and it's not necessarily what I would recommend. That's when CPAs, when accountants, I think, fell short a little bit on their advice, because they just ask the customers or their customers to do some kind of strategies like that, so they get rid of the tax this year, but they're not telling you that now you're getting a problem with insurance, with the maintenance, with other kind of things, right, that are becoming also expensive. So it's very important to take advantage of those kind of strategies, but to use them in a good way so you can invest in real assets. And that's a big difference between assets and liability. And you have a great description of what's an asset, what's a liability. And it's not what they teach us on or what we learn in accounting 101.
Yeah, no, for sure. But you know, and so let me, for the viewers that are watching this, let me I'll define that in a second. But here, let me say this before I get to that. I think people are surprised when I talk about the IRS. A lot of people, and I think you would agree, hate on the IRS. They're like, the IRS is evil. I don't like the IRS. But the reality is, whether you like it or not, the IRS is your partner. So you may as well make them a strategic partner, right? So, you know what? I don't frown on the IRS. I've accepted the fact that they're my partner, and the IRS gives and the IRS takes. So I've got to be able to work out with the IRS saying, hey, I'd like to be able to like take more than I give in this strategic partnership. So for as much as people are contributing to the IRS, there's also within the IRS codes, which are pretty extensive, as a strategic partner, they're putting on a platform for you to be able to take advantage of stuff like accelerated depreciation, and in real estate 1031 exchanges, and whether you set up your company on a calendar or fiscal period. Like, I think people have to stop looking at the IRS as the enemy and just say, okay, listen, the inevitability is we are partners. So let me define how I would like this partnership to go, right? There's going to be some give and take. So it's not going to just be me giving. There's also going to be some strategies and some codes that I could take advantage of, to my benefit. So this is a true partnership, and it's give and take, and that's the way people should look at it, and not just like hate on the IRS, right? So I think people are surprised when I
Exactly.
describe the IRS like that. I don't look at them as the enemy whatsoever. We are strategic partners. Okay, now having said that,
I love
so let me go. Let me go to the point of what you said, which is I would consider a very unique definition. I know in school, in business school, and when CPAs are being educated and getting their degree to be, to become CPAs, you're taught for the most part that an asset is anything like anything that has value, let's say. Okay. So to me, but I separate the definition and I have different tiers of it. My true definition of an asset is it must put money in my pocket each month. If it's not an asset to me. So, for example, if you ask most people this question, do you consider your home an asset? Most people, right, would be like, sure, yeah, it's an asset. It has value to it. But the subsequent question is, okay, at the month, does that supposed asset put money in your pocket or does it take money out of your pocket? And if this thing takes money out of your pocket and does not generate for you an income, then someone please explain to me how that's an asset, because I surely don't look at it that way until I can take something and convert it and have it work for me. So, like if I take my principal residence and have it work for me so that I can now convert it into an asset, until I can do that, it's a liability. People have to stop looking at their home as an asset. And I tell you, the minute people stop doing that, then they're going to have a different perspective on what it means to build wealth. I'm going to ask this question, okay? So, in a lot of presentations that we give, I think the very first time that I asked this question, I had people kind of like looking at me with like these like lizard eyes, right? Like, what? And the question was, hey guys, do you store money under your mattress? And people were like, what? Why are you asking that? And I'm like, just, answer the question, follow me. Do you store money under your mattress? And, actually, some people
it.
will be like,
There's one
yes,
or
I
two
do,
hands out there.
right? Like, grandma, yes, I store on my, okay. Well, the average person. So 9 out of 10 people will be like, no, I don't store money under my mattress. Great. So I had to like totally shift their mindset. I was like, great. If you don't store money under your mattress because that's not logical to you, then my question is, why are you storing money within your walls? Take a look at, I want you to like, as you're walking from room to room in your home, I want you to take a look at your walls and just picture all the cash behind all those walls. That's the equity that most people have in their home. So your home can be converted into an asset. If you can tap into that equity and have it work for you where it's now generating and putting money in your pocket, then great. But if you don't have the ability to convert that equity into a machine that's producing for you, then let me tell you, that home that you live in is not an asset. And most people's understanding,
Mhm.
I had one guy at Mundo who said, yeah, my home's an asset. And I said, how do you figure? Well, I bought my first house for 400,000 and then now it's worth like 700,000. And then my wife and I sold it and we upgraded. And we ended up buying a house for like 830,000 and now it's worth like 1.2 million. And I said, that's great. I go, what about your mortgage payment? Did it go up? Did it go down? He goes, well, our mortgage payment, went up, but we have a more valuable home. And I'm like, great. All you did was increase your liability. You have more money coming out of your
Yep.
pocket each and every month. So it's such a
Mhm.
like subtle, fine distinction between the two, but in the financial world that we live in, it's such a misunderstood concept.
It is because they told us that we have to own a house, but the problem is that you have that money sit and and you're not really using it for business purposes to create wealth, to create a cash flow, as you said. And and it took me years to understand it, you know. And I think there's a huge opportunity. The other day you were telling me an example of somebody using his own mortgage to buy other properties so they can get more cash flow at the end, even though that he owns more, that he owes more, but he was getting cash flow out of his own mortgage. Instead of paying, now he's giving back, receiving back, right? And I think that's something that it takes sometimes years to understand, and not everybody, because we are concentrating so much on, as you say, working in the business instead of working on the business, you know. And we get distracted so much, and we don't understand those kind of things. And that happened to me, as I said. I bought many vehicles, I bought machinery, I bought things, and I depreciate them in 10 years, in 5 years, or whatever, instead of doing it like right away, because I have the right to do it. And the tax um, code in this particular matter is not actually made for the rich people, because the rich people might be investing, it's not for Apple might be investing billions of dollars in things. They cannot depreciate immediately like we do,
Yeah.
because that initial depreciation is just up to 1 million, I don't know, 1.3, 1.2, something like that. Every year it changes a little bit because they update it for inflation purposes, but it's just 1 point something million dollars. So it's for the real people, it's for us, the small businesses, to take advantage, and for the small investors, so we can grow. Eventually it's not going to be enough because you are doing a lot, but instead of paying taxes, you can go and buy a property and do a cost segregation analysis, and that way you're going to save a lot of taxes this year. So the IRS actually finance you the first payments by not paying them taxes. Uh, you can also buy assets for your business. You can go and buy another business that has assets that you can depreciate again. The other day, I was also talking about how the same asset can be depreciated several times, and
Yes.
people do not see those kind of things, and that's available on the tax code. And I mean, we are doing it right now in our business. uh, so those kind of things we have to learn, again, about immediate expense, accelerated depreciation, bonus depreciation. There's so many things that we have to take advantage, because that asset that you buy to avoid taxes or to defer taxes can help you grow. And the last thing I was going to say about this is not the same as taking a how can I say that, an expense and avoid a tax this year. But if you defer it, it's still very good, because people might say, oh no, yeah, but if I depreciate immediately, I'm going to end up paying taxes the next years. Yeah, but it's better not to pay taxes this year. First of anything, the next year we don't even know if we're going to be alive. The second thing is, uh, uh, the next year the money is worth less. So just because of the inflation, it's not the same as paying $10,000 in taxes this year than paying it 5 years later, right? So those $10,000 in 5 years are worth way less. One thing. And if you don't pay the taxes this year, I hope that these 10,000 you can use them to create more money. So maybe in 5 years, instead of paying today 10,000, maybe you have already 15,000, and you end up paying way less because you use the tax that you save to create more. And that's when people do not understand that they can have that kind of advantage.
So I totally agree with what you're saying. I think the unfortunate thing is, for as much opportunity as there exists in the U.S., um, we have such a divide in this country on like political ideologies and different economic systems and structures, right? And I'll give you an example. So there's this gentleman right now who won the Democratic nominee in New York. He's running for mayor. His name is Zoran Mamdani. Okay, and right now he's gaining a lot of ground and momentum because people like the socialistic strategies and ideals that he has, um, and they're all for like what he wants to do in New York, which is the financial capital of this country, right? He wants to create government-run grocery stores. He wants to implement rent freezes, and you're getting all these people that are like, yes, yes, equality. And the shameful thing is for as much as he runs his campaign on those things, you know what I say that this country needs more of? What we're talking about, to become financially literate. Because these strategies that we're talking about are available to everyone and anyone. They just don't know. And ignorance is not bliss. And when what you don't know that you don't know is killing you financially. So the masses that are in favor of all this government intervention and controlling of this and controlling of that are the ones that unfortunately you will find the highest level of financial illiteracy. And that's why I'm proud of what we're doing at Buying America, because not only getting involved in our organization gives you the ability to get into business opportunities that we're doing our due diligence on and partnering with, but real estate opportunities, and we're also giving the financial education. So just got to continue to do what we're doing. And I'll tell you, this last point here on when you're talking about building wealth, I'm gonna keep this as simple as I can, and then you grow off of this philosophy. Then there's the details and education behind it. But my idea of building wealth comes down to this formula, which contains three pieces. One, anything that I invest in, I will invest in assets. Number two, it has to be something that I can depreciate and leverage. And then number three, it has to have the ability to grow, whether it's a business or capital appreciation. But those are the three things that people should be looking out for. How do I accumulate assets that produce income for me today? They have to be able to generate income. Number two, I have to be able to depreciate them. I have to have the ability to leverage, because I understand good debt versus bad debt. And then two, it has to have the ability to grow, expand, appreciate, capital growth. If you operate with those three things in mind, and then you start to educate on how to implement the pieces in each of those things, you're in the US. You're gonna make money.
Yeah,
So
that's exactly right, Joe. And I think that's something that we love doing at Buy in America. It's a great group, and especially what we want to do is all this knowledge costs you for sure. I'm gonna guarantee you hundreds of thousands of dollars. And the same happened to me. We have so many years doing business here. We made all kind of mistakes already that cost us a crazy amount of money. We already went through CPAs that didn't tell us, hey, you have to do this to save on taxes. They told us how to fill the taxes and how to file the tax returns, but they didn't told us, hey, if you do this and this and this, you can avoid this tax, you can avoid the others, because they are compliant only to the IRS, but they are not challenging them themselves. And I think that's what we do as entrepreneurs. We're always challenging us how to do it, how to do it better, how to save, how to grow. And those kind of things are what we are bringing to the table at this great community of Buying America, because people do not know all the advantages they can get by having this kind of advice, because money is very hard to make. We should have to have somebody to help us preserve it and grow it, and especially to grow it while we sleep. And that's the most difficult part, I think, of being in business, being an investor. And as I love what you said, I really believe that the IRS is or has to be our strategic partner. And everybody, I will say most of the people, do not see it like that. And when the minute that you learn that, I think we have a great opportunity in the US.
Yeah, and I'll end up on this note. I mean, you and I can just talk forever. You know that, right? But here's what amazes me when I hear people complain. Either they're just working their job and they haven't even engaged in the attempt to build a business or invest. There's that category of people. Those that just started a business and failed, and they have nothing but bad things to say. And my question to those people is, have you ever played a game, a sport, a board game, just you name it, any sort of game, and expected to win when you didn't even know the rules of the game? Like, how can you? So it amazes me when I hear people complaining, and then I'm like, well, did you implement this? Did you appreciate that? Did you ask your accountant this? I talk about all these different things, and they're like, no, I didn't do that. Oh, I didn't do that. And I'm like, well, how do you expect to play the game and win when you don't even know the rules?
Yeah,
So most
exactly.
people aren't even willing to educate themselves. They jump in and play this game, and let's not kid ourselves. When we talk about the most played sport on earth, you know what I say? It's not soccer, it's not baseball, it's not tennis. The most played sport on earth is the sport of business.
Yeah.
It's played globally. It's played 24/7 somewhere on this globe. That sport is being played. So
Yep.
it's the biggest sport on earth. How do you not want to understand the rules of engagement? That just boggles my mind. So, yeah.
That's pretty good. So, Joe, thank you for your time, and I love our conversations, because it's like talking to friends about it. But for us, it's very normal. For a lot of people, it's not. So I hope that these videos, these podcasts, are helping educating people that wants to invest in the U.S. If they want to bring a business into the U.S., they want to move to the US. So this is Buying America. We are trying to help. We're trying to pave the road for them so they don't go all bumpy as we have to do it many years ago. So this is Buying America. If you want to save on taxes, if you want to make the IRS be your strategic partner, join us.